This isn't a post-apocalyptic movie set. This is Ordos, China. A multi-billion-dollar, ultra-modern city built for over 1 million people, yet it sits almost completely silent, occupied by less than 2% of its intended residents. But Ordos is not an exception. It is the perfect monument to the $9 trillion problem threatening to derail the world's second-largest economy. Right now, China holds enough empty homes, 65 million of them, to house the entire population of the United Kingdom. The big question: why would a hyper-efficient government build entire cities, glittering skyscrapers, and modern infrastructure that nobody needs? The answer isn't mismanagement. It's the most deliberate, most dangerous economic strategy of the 21st century. And it has the potential to trigger the next global financial crisis. This is the story of the ghost cities, the debt spiral that built them, and the domino effect that makes it your problem. To understand the ghost cities, we have to start in the year 2001. China joins the World Trade Organization, WTO. This unlocked an export boom and flooded the country with cash. The government now had two primary goals: maintain economic growth, GDP, and maintain social stability. And they found the perfect engine for both: real estate. For the average Chinese citizen, owning property became the most crucial symbol of wealth, security, and the path to marriage. It wasn't just an asset, it was a societal guarantee. House prices in major cities soared, making every homeowner feel wealthier. This achieved the social stability goal. But the real genius and the real danger lay in the government's structure. In China, the central government collects most taxes. Local governments, the cities and provinces, are responsible for the vast majority of spending on schools, roads, healthcare, and infrastructure. The problem? Local governments were not allowed to borrow directly from banks, so they invented a financial loophole: the Local Government Financing Vehicle, or LGFV. Think of LGFVs as shadow companies, shells that were technically separate but functionally controlled by the local government. Here's the loop. The local government seized land from farmers, often compensating them poorly. They injected that land into the LGFV. The LGFV used the land as collateral to borrow massive amounts of money from state-owned banks or by issuing bonds. They used the borrowed cash to fund the infrastructure, roads, bridges, utilities, that made the surrounding land even more valuable. They then sold this newly valuable land to developers like Evergrande. This cycle was a self-fulfilling prophecy. More construction meant higher GDP figures, which secured political promotions for the local officials. The focus was not on whether people needed the houses, but whether the transaction boosted the GDP number and kept the debt machine spinning. This created an incentive structure designed to fail. Local officials were rewarded for spending and building, not for profitability or real demand. And the debt, the mountains of borrowing by LGFVs, stayed off the official government balance sheets. It became China's massive, hidden, $9 trillion shadow debt. Open loop. This system only works if house prices keep going up. But what happens when the people finally say, enough is enough? The music finally stopped in 2021. The poster child for the entire leveraged system was Evergrande. They were not just a company. They were an economic force, building entire city blocks and owing over $300 billion. Their business model was simple: sell pre-construction homes to eager buyers, use that cash to start the next project, and borrow relentlessly. It was a high-speed construction Ponzi scheme. Beijing finally realized the systemic risk. They introduced the 3 red lines policy in 2020 to force developers to deleverage. It was intended to cool the market, but it acted like a sudden, hard brake on a speeding train. Evergrande couldn't borrow. They couldn't finish projects. They began defaulting on their debt. And here is the human tragedy. Millions of Chinese families had paid for apartments that were now half-finished, abandoned ghost towers. In 2022, homeowners began boycotting mortgage payments for these unfinished homes, sparking the mortgage boycott crisis. The crisis spread quickly to other giants like Country Garden. The dominoes were falling. First, the developers. Then the LGFVs, which couldn't sell their land anymore because developers were bankrupt. And finally, the state-owned banks, which were holding all that bad LGFV and developer debt. You might be thinking, that's China's problem. That's the biggest mistake you can make. The Chinese property collapse is not a local event, it's a global deflationary shockwave. Reason 1. Commodities demand. China's construction sector was the world's biggest buyer of steel, copper, and cement. Now that demand has evaporated. Commodity exporting nations like Australia, Brazil, and Chile, all major suppliers to China, are seeing their exports and growth plummet. This deflationary pressure ripples through the global supply chain. Reason 2. Western exposure. Major Western investment banks, pension funds, and asset managers all hold exposure to Chinese debt, either directly through corporate bonds or indirectly through commodities and emerging market funds. When Evergrande defaults, that loss is ultimately borne by investors worldwide. Reason 3. The loss of the engine. For decades, China was the engine of global growth. If the 9 trillion ghost city problem forces China into a decade of stagnant growth, a lost decade like Japan's, global economic expansion slows with it. Suddenly, U.S. companies have fewer customers, emerging markets lose their biggest buyer, and the entire global growth forecast is slashed. It's the financial version of the butterfly effect. The debt crisis in an empty city in China creates a tremor felt in your retirement fund in the U.S. So, let's circle back to the core question. Why did they do it? The Chinese government wasn't building homes, they were buying time and stability. They built economic growth on a foundation of debt and rising property values because it was the fastest, most effective way to ensure people were employed and felt wealthy. The ghost cities are the physical manifestation of a flawed economic model, growth at any cost. Now, that model has reached its mathematical limit. The debt is too large to service. The properties are too numerous to occupy. The confidence is shattered. The 3 possible outcomes are all painful. Massive government bailouts, printing trillions to save the banks and LGFVs, leading to severe inflation. Chaotic default, allowing the banks and LGFVs to fail, leading to widespread financial panic and social instability. A lost decade, a slow, painful contraction as the country pays down the $9 trillion debt mountain, choking off global growth. The world is holding its breath, watching the empty streets of Ordos. Because the greatest economic crisis of our time won't start with a stock market crash, but with a ghost city that was never meant to be occupied. If you want to understand the forces reshaping our world, from currency wars to commodity collapse, this channel is dedicated to separating the signal from the noise. Click subscribe now and let me know in the comments. If you could choose one city to save or one bank to let fail, which would it be and why?